Hey guys, welcome back. In this video, we're going to cover tons of stuff. Specifically, where is this market going next? If you want to know, I'm going to give you some specific charts and some explanations. Number two, why the area that we're approaching could be some of the best areas to be a short seller. For those of you that are not familiar with the term short seller, those people that make money when stocks fall opposed to when stocks actually go higher. As you probably know the saying, stocks typically take stairs on the way higher and they take the elevator down. In other words, they drop much, much faster than they climb higher. And with the markets at all-time high, this presents some tremendous opportunities. So if you're not sure how to short sell, specifically in this video, all the examples that are going to be given, they talk about shorting stocks through put options. And we're going to look into some details and how you possibly missed on some trades, and I hope you didn't, but we are going to review some trades in this video. So let's take a look at the first chart, the chart of S&P 500 futures here, okay? So here's the question for you. As always, on the first slide, I typically have a question for you. What do you see in this chart? Okay, so take a closer look. S&P 500 futures on Tuesday, which was September the 4th, Wednesday, September the 5th, and today, Thursday, September the 6th. Take a look at this chart. I'm going to give you another minute here. What do you see when you look at this chart? Hopefully you've got an answer in your mind by now. And here it is. Same market move. Now, for some of you that have not been following my videos, I actually invented a 13 markets move formula where I have assigned to a specific market move a numerical number, a numerical value. And so in this particular context of what the market is doing right now, just bear with me. You may not be familiar with all the market moves, but this market move to me in my market move formula is a move number 12. It is actually doesn't happen very often where a specific market move repeats itself consecutively in a row, but it is actually a typical characteristic of a move 12. Move 12, once you actually capture it the first time, it has a very high probability of repeating itself. Now, real quick, if you go back on Tuesday, the market opens up with a gap down, and then it basically goes lower, tries to rebound, goes lower second time, and basically finishes lower still, even though it looks like it's going high, but it finishes lower from where it started. Surprise, surprise, on Wednesday, the same move, okay? So pre-market, after market, it goes higher, tries to maintain, actually gaps down again, and draws the same pattern, right? And today, same pattern again. So what do we see of these market move 12? Well, it actually tells us, even though it looks like they're buying the dip, because typically if you analyze and examine, you know, there is a chart pattern, just as there's a chart pattern like double top right here that I've got highlighted, that this consecutive series of market move 12 come after these double top, right, which was set pre-market. Of course, the markets were closed on a Monday, but the futures drew this double top before the market opened on Tuesday. If you actually take this double top and you reverse it, you will have similar what you have here, which is technically a double bottom. But every time it draws this double bottom, it's very deceiving. Typically in a double bottom situation, the stocks or, you know, whatever chart you're looking at typically breaks out and goes higher. Well, that's not the case here. As we can clearly see, the market, even though it looks like they're coming in and they're buying the dip, they're actually not doing it the way they would typically do it. And I'm going to give you a historical comparison. We actually had a sequence of events not so long ago where market move 12 consecutively repeated itself in such a fashion in June. So I'm going to show you that data in just a second. Here's what we've got, right? So it looks like they're buying the dip, but the market keeps opening lower. It looks like they're buying the dip, and then the market keeps going lower. Now, the market now consecutively has gone 3 days in a row. What could we expect next? We'll get to that question in just a moment. So let me take you back to June, and here's just, that's not full statistics, but this is how I actually measure these market moves, right? So don't get confused, a bunch of numbers. I just want you to pay attention to this, right? So you have a move 7 followed by 12, another 12, another 12, and then followed by 7, And pay attention, look with this 3, okay, with the purple dot. So this actually has a very huge significance. Also important to observe these little numbers right here. They are actually the VIX range. In other words, on the 19th of June, the VIX was as high as 14.68 and was as low as 13.2, which is very similar to the VIX environment that we're currently experiencing. So let me take you back to the chart and show you specifically how did that look and what happened next, okay? So if you try to, hopefully you guys can see this, okay? And so this tiny little dots, okay, this is actually S&P 500 that we're looking at for the period, for the time frame on June 18th, 19th, 20th. These are these dots. The market consecutively went lower 3 days in a row. What happened next? So you're probably wondering, oh my God, should I keep shorting stuff? This is going to be a market crash tomorrow. What's going to happen? Well, tomorrow, my answer to the situation tomorrow is actually the market could do this if the historical behavior repeats itself. If we draw a comparison to what was happening back in June, right? The market actually, after 3 days lower consecutively of a move 12, all of these were move 12. 1, 2, 3 right here. The market actually paused in a move 7. And then what we had after that is a sharp decline, 5 days consecutive in a row, which equated to 75-point drop after 1 day pause. Now, what else is interesting, which I didn't draw here, the distance between this area right here on the chart and the 50-day moving average line, percentage-wise, is actually very similar as well, which is another sort of repetition of the history. And so if we notice, and we try to use this as an example to predict what that actually going to be taking place here shortly in the next week, then interesting fact here is a lot of times S&P, as you see it approaches the 50-day moving average line, it doesn't actually reach it. Like in this case, it's almost there, but it's not even touching it, right? But in some other instances, like here, clearly S&P went way below the 50-day moving average line. Again here, didn't even touch, close, got close right here, but didn't touch it. And then definitely here it broke through. So if we're using the same thing, we can easily see ourselves at 2,800. And so these 3 red candles right here are almost identical to these 3 candles right here, which I have highlighted with these blue dots right here on top of them. So what's about to happen is tomorrow we could have a pause in the market. In other words, there may not be a significant huge drop tomorrow, maybe a small drop to maybe possibly the market going higher. Basically, it's going to be a stalemate. It's going to be, the market's going to be stalling tomorrow. There's a high probability of that. However, going into Monday, Tuesday, Wednesday, Thursday next week, if the history repeats itself, this is exactly what we're going to see. And maybe between Monday and Tuesday, we could see the market all the way at 2,800, which would going to be percentage-wise very proportionate to the 75-point drop which we had back in June. What do you see in this chart? Which this is, by the way, a chart of VIX on a time frame of 5 days, 5 minutes. 5-day, 5-minute chart. Hopefully, you've taken a mental note and you've answered that question in your mind. Let's go ahead with an answer. Okay, VIX reaches historical pre-February 2018 mini crash levels. And this is what we're observing today, right? 15.41 was the highest of the day. VIX roughly closed around 14.4, 14.7 range. This picture was actually taken just a few minutes before the market closed, okay? So the actual numerical value, I think, is like 14.46 when it closed for the day. So clearly, if we were to draw a line right here with all the yellow dots, right, VIX is in a very, very solid uptrend. If opposed to a video I made on this channel maybe about 3 weeks ago, explaining the strategy how to buy VIX calls, it actually jumped 4 days after I made that video. The VIX jumped all the way to 16.8 and it retracted very quickly. However, this time I'm seeing that this support that's forming here around 12.8 to 13.14 level is really, really strong. That is why I think that the only answer for the VIX from here is to go. These observations, of course, were not as clear when it was just coming up here from 12 to 12.5, but now it had failed to go lower so many times 5 days in a row that we got a very, very solid uptrend in the VIX. Now, what is the importance of this? Well, historically speaking, you know, August and September are going to be your months where the VIX spikes because the volatility increases in the market. It is combined with a few other things here. So let's take it back a little bit. This is where the VIX was in February 2018 when we had this miniature crash where the markets were dropping 1,000, 1,200 points in one day on a few instances. This is exactly where the VIX was before this happened, okay? And so I'm drawing this. It's not perfect, right? But it is a very bullish pattern that is forming here, and looks like this time it's got really, really some strong foundation here. And to me, this possible cup with a handle, which for those of you that may not be familiar, cup with a handle typically breaks out to the extent of 20, in some instances 30% from this point here. So if that's the case, then 30%, we could see the VIX shooting up all the way to 20 from here, possibly in the next, 72 maybe hours. Basically, by Friday next week sometime, we could see the VIX even higher than where it's at now. So again, the importance of this yellow dot right here corresponds to the yellow dot today. And the VIX ranged again from 14.4 to 15.4. It has a substantial probability to jump out and break out of this potential cup with a handle pattern. Now, we actually warned before the market started dropping this week, before you probably, if you're trading on your phone or on your computer, before all this red stuff happened, before all this red action took place, we did warn our subscribers, and I don't mean our channel subscribers, but a lot of times simply like when the markets are crazy like they have been this week, we trade and trade and trade and trade. So we've been doing a lot of trading. That's why I haven't been putting a lot of videos up on this channel. But a lot of trades that we don't talk about, if you're a subscriber, which you can easily subscribe, we do have a couple of mandatory requirements as far as taking the chart course and the 13 markets move formula, depending whether you're trying to go for the VIP alert subscriber or just the long-term subscriber. There's basically a couple of prerequisites which are designed for your own benefit too, so you can execute some of these trades with higher accuracy and higher success to yourself. Okay, but basically, before all this red stuff happened, right, this is what we sent out to our alert subscribers, okay? Not only did we warn that the big down day was going to happen on Tuesday, okay? So this was the alert. There's a picture of it on Friday, August the 31st. I said, hey guys, Tuesday could be a huge down day. Now, on Friday, clearly, it was 3 days. That was before the holiday on Labor Day on Monday, right? So I said, hey, Tuesday could be a huge down day. Not only did we warn our subscribers about that, but we also gave them this alert to actually September 7th, which is tomorrow's expiration on Google. We recommended buying these Google puts with the 12:30 strike at $11. Okay, for those of you that are not familiar with trading options, basically, if you executed that trade, this trade would be profitable if Google dropped below $1,230 anytime before September 7th or on September 7th. And so the lower it would have dropped, the more money you would have made. And so at that point, when we sent out the alert, as you can see, it was 1 hour and 1 minute before the market closed on a Friday. We'll see exactly what happened to that trade. We also said that institutional investors were starting to get nervous about the Amazon. And we'll also send out a couple of other alerts like NTS 190 puts, which worked out beautifully as well. So here's what happened, right? If you did execute that trade, the 1230 puts on Google, all right, here's what would have happened. This big green-yellow dot right here, 15 would stand for 3 p.m. on a Friday. This is the point of the alert. This dot right here, this yellow dot corresponds to a price of 12.32. That's when the alert was sent out. And as you can see, 1 day, 2 days, 3 days. Within 3 days, the stock has dropped from $1,232. It traded today as low as $11.63 and some change. So your put option that you would have been able to buy on Friday at $11 basically means Each option controls 100 shares, so you would ended up spending $1,100 for this put. And today you would have been able to sell it for as much as $70, which literally translates for every $1,100 that you would have invested last Friday within 72 hours, which is 3 trading days, right? Would have gotten you $7,000 for each $1,100 that you would have invested. Now I'm giving some examples because a lot of these, they are, you know, Google and Amazon and some of the other ones, they're very common stock that everybody follows. So I'm trying to give you some very easy examples here, guys. Now here I'm going to give you an example which everybody should be familiar with, and I will say that this one has been a tough one. So sometimes the point I'm trying to make by showing you this demonstration here is this: sometimes when you are trying to short stocks, ideally you want to nail the top, but nailing the top is a sort of like a rocket science. Okay, it's not as easy to do at times, and sometimes you're like boom and you just exactly on it, and sometimes it just doesn't work as good. So the question is, I'm going to take you through this little history of the last couple of weeks. Amazon hits 2,000. Everybody goes crazy wild. So the question is, would you have considered shorting Amazon as it shows in this chart when it's hitting 2,075 cents? So were you remotely interested in shorting Amazon at that point? Just give yourself a truthful answer. It was hitting all-time highs. My goodness, $2,000 on Amazon. Every bull probably woke up that day and was celebrating, okay? So actually what we were doing, we were shorting Amazon. So you know what happens next, right? So some of the alerts we send out that day, they were losing money, okay? So not every alert we're going to send out is going to make money. And so timing sometimes makes all the difference. However, I'll show you, stay with me through the rest of this example. You see exactly what would have happened, right? Okay, so we did, but that time it was too early, right? So now Amazon hits 2,050. Would you have thought about shorting it here? So there's the 2,000 level. Here's now it's 2,020, 2030, 2050. That's when all the news channels went ballistic. They're like, hey, Amazon, $1 trillion, the second company after Apple. Well, they all neglected to say that, oh boy, it didn't stay there very long. But here's what happened, okay, when Amazon hit 2050, okay. This is actually a very good example, guys. If you're a trader, you should know how good this example is, because when you have a strong reason to believe, and let's say you're shorting, that doesn't have to be shorting stock. Let's say if you typically are very bullish in the market, and let's say that you're trying to catch a dip, and the stock is falling, you're like, oh my God, this is a really good deal. I need to catch in, I need to come in and buy this dip because it's about to reverse and go higher. So you get in and you buy some shares. What happens the next day? Well, the stock continues falling, and you're like, oh my God, man, now I'm sitting on a big loss. So the same thing with shorting, right? But it's exactly the opposite. When you're shorting stocks, what happens is, you may be getting in right here at the 2,000 level and thinking, okay, this is the ultimate point of the top where the stock is going to turn around. Well, the turnaround does not actually start taking place $50 higher. And so at this point, as the stock keeps going higher and higher and higher, what would you say happens to your level of conviction about your trade? Now, if you're bullish, clearly, you're like, oh man, to the moon. Okay, now, if you're bearish, if you're a short seller, if you got in the position right here, if your trade keeps going against you and against you and against you, then by the time it hits 2050 and all the news channels are screaming, oh my goodness, another company hits $1 trillion and they make such a huge deal out of it, that pretty much destroys your confidence level about your trade. So this is the time where typically any short seller would have thrown the red flag and said, hell with it, okay, I'm done. Everybody loves Amazon. It just clearly to me it's going to go way, way higher than this, okay? When it was trading right here at 2,000, I actually posted a short clip of the video for the very first time, and that's not essentially the reason why we've been short Amazon. We've actually been shorted for, the last few months, and we've been trying to catch some of these stops, and some of these trades were highly profitable, just as this one, and I'm about to show you. But there's a couple of guys, and this is like the first time somebody would go on, that would even allow somebody that's bearish on a stock like Amazon to talk on, CNBC, which I thought was pretty crazy. That's why I posted the video. for the very first time, they've actually allowed somebody that had a controversial idea to the market. And so those guys were pretty sharp. And so I posted it, and they were talking how they were planning on buying and shorting Amazon right here around 2000, and they were planning on buying it back at 1650. So that tells you what institutional investors are thinking. So surely enough, the top was not nailed here, but it was nailed here, because this is what happened. Okay, we sent out the alert, and actually it was on a Tuesday. So here's the alert we sent when this Amazon was trading around 2042, 2048 level. There it is at 9:36, so 6 minutes after the market opens. We recommended buying Amazon 2000 level puts. Now keep in mind, that's $50 lower than they were way out of the money, right? So you might be thinking, oh Jesus, the stock is going to all-time highs, $1 trillion. Why the hell would you short it here? And $50 lower as far as the strike price. Well, that wasn't it, okay? Here's another message that we send out to our subscribers saying, look, at 11:51 a.m. on a Tuesday, okay, Amazon big sell-off about to start. Hurry, buy. So you actually had two opportunities to buy Amazon puts, and here we suggested buying any strike between 2020 and 2000. So you could have bought either one of these strikes, okay? So what happened? Finally, the patience pays off. Here's what happens. This is the 9:36 alert that we sent right here. As you can see, that's where Amazon was trading on Tuesday. And this was the second alert about 11 a.m. and some change when we recommended make sure that if nobody missed that particular trade. So between these two alerts, since we sent these out, the stock actually drops $115. Now, it's not necessarily the magnitude of the move, but also the time frame of the move. Look, it happens in 48 hours. Today, Amazon traded as low as 1935. So we're literally talking, guys, we're talking about 72 hours. Tuesday, Wednesday, Thursday. The alert was sent out again. I'll take you back to that slide and I'll show you. It was sent out on a Tuesday morning, okay? So you see right here, Tuesday, 9:36, 11:51. Okay, now depending on what level of subscription you have, okay, sometimes you'll get more alerts. Okay, for example, also that day we've sent out Shopify 142 puts. Okay, and so those were traded today as low. Shopify traded today as low as $133. Now you could have bought those on Tuesday at 9:38 a.m. for $1.20. They were worth almost $10, so that was almost 1,000% return right here. This was not as huge of a home run right here, but these are clearly, they've doubled in value from 1.8 to 3.6 at one point. Also, one stock that just was super bullish. We were on, so we got this one wrong. I've got a minus right here. Take-Two Interactive. I know a lot of institutional investors were actually very bullish on this thing, but that morning it was trading at 133.6, and these were actually September 21st puts at 1.8, and we had a target of 121.7, so it hasn't hit that target yet, but it did drop significantly all the way to 126, 127, so these have tripled, so 300% return. And the reason the target price is lower, well, we still got quite some time till September 21st, so I think they actually will reach that target level here. I'm not going to go behind all the, explanations on why and how these trades were calculated and based. If you're curious, we cover a lot of that stuff in our courses, the Trade and Idea Generation course, the Charts Divergence course. So just click the links below, take action, sign up, get more knowledge and understanding on how you can actually do this on your own. The stock fell, okay, when Amazon fell to $2,000 level, right? So here was at 2,050, it drops to 2,000, and looks like people are coming in and buying it. Well, we noticed the opposite of that. We noticed that there was a head and shoulder, which is a very bearish pattern that was forming on a 5-day, 15-minute chart. So what happened when everybody was actually, when these, I don't know if you can see this, but there was a green candle right here when it was dropping this morning, and then they started buying it like crazy, okay? A lot of people jumped out. So if you were one of those people, all you had to do was stay with the trade, as a lot of times we recommend when you're executing the alerts, is stay with the trade. And clearly you would have stayed with the trade, and you would have been able to capture with almost 1,000% return, guys. But see, if you're just getting the alerts, you don't have understanding of these patterns, of these charts, right? Because we don't necessarily, when you're just signed up for the long-term alerts with us, we don't call you, we don't tell you, oh, hey, by the way, we're seeing the head and shoulders pattern, you should stay with your position, right? So a lot of people, you know, they get the good alerts, but some of the alerts, they turn not as good or bad at times because people get out of them at the wrong time. So a lot of people that jumped out right here at 1990 level today, they missed on this entire drop, right? On this entire drop all the way to 1935. So guys, there's huge gains to be made, but along with the alerts, you really need to get a better understanding on how to manage these trades. Some of the best trades, if you're a trader listening to this right now, some of the best trades that you probably came up on your own went bad because instantly after you got into the trade, it went against you. So if you were bullish and you bought a stock or you bought a call option, the stock started dropping and you know you were down maybe 20% on your call options and you got out, only to find out that the next few days the stock rocketed way higher and you would have made a ton of money, but you were already out of the trade. So to avoid situations like this, you clearly have to have some substance, some specific, clear understanding about why you're getting in the trade, about why it makes sense to stay patient with the trade. And again, especially when you're short selling, nailing the top is not an easy task. It can be done, but you cannot give up on your trading ideas. And in order to do that, you really have to have some substance from understanding the charts and things like that to help you stay and execute your trade well. The idea of the alerts, let's talk about this for just a second, is to inform a trader before the calculated move happens. But at times, that could mean that it's a bit early. Bottom line, you don't want to receive an alert after Amazon have dropped $115 in the last 48 hours, right? You want the alert before that drop actually happens. So if you're watching the videos on this channel, some of the videos, they are not designed to give you trading ideas that need to be executed. They're for illustration purposes only. A lot of times they describe some of the trades like I'm showing here right now after they took place. And sometimes I do occasionally like a prediction like we did with Tesla and BKNG and a few other ones. And so some of those trades sometimes immediately go the direction of our calculation. However, sometimes the trade may not go initially as planned. So it doesn't mean that it's a bad trade. It just means that the timing is a little bit off. And so if you stay with some of these trades, like recently I posted FANH, you know, that trade is a really good trade. Everything screams short me on the chart. But however, the stock has been going probably $1.50 higher since I posted the video. So hopefully if you did take action on that, you're not jumping out of the trade. Just stay patient, stay with it. Again, patience pays off, as clearly the Amazon example is illustrated here. So if you are watching some of the material on this channel, but you'd like to be able to do more, okay, you'd like to be able to take your trading to the next level, just take advantage of some of the resources, the courses, the subscription below this video. They're all posted in the description. And each link will give you an understanding. It'll have like a little video that'll talk about the course or the subscription, what specifically it will provide for you. Okay, some other stocks that we recommended shorting on Friday and Tuesday. Okay, NTS, $12 drop. Okay, this is one of the Chinese gaming stocks. We recommended shorting it at $1.99 on a Friday. We recommended shorting it again on a Tuesday. So the stock dropped to a low of $188. That was about a 300% return. Some of the other stocks recommended shorting on Friday, ABMD. Okay, the alert actually went out on Tuesday, right about the price when it was trading about 406. And as you can see, it fell to 376 within 72 hours. However, I do know for a fact that some of the guys that took this trade, guess what they did? And now they're crying because they got out right here. See, this is a good example of how the alert went out right here. The stock goes, instead of dropping right away, it goes from 406 to almost 414, and then it drops $40. Well, from that point it would have been 50, but from the time we send out the alert, it dropped $40. 400% gains. So these guys, what they do is they lock in the loss here, and then they wonder, why the heck did I do that and I missed on this 300-400% trade. So don't be one of those. Take the chart course so you have an understanding of when to stay with your trade, when to cut losses. Really, just if you're just following your emotions as you're trading, it's going to be very, very difficult to stay consistent. And that's what we'd like for you to be, because look at these examples. There's a ton and ton of opportunity that the market is giving you on the short side. So some of the other stocks recommended shorting on Friday, ANET. Okay, ANET dropped, $41 drop, another huge gainer from 306 all the way to 365. $41 drop. And this was actually my personal favorite this week. Spotify. I know a lot of people were shorting Netflix. We were shorting Netflix a little bit. Through the correlation trade, we caught this one, and the alert went out on Tuesday. So at the point, the stock was trading at 191. This 180 puts were only like 30 cents, and today they were worth as much as $9. That's a 3,000% return. So in other words, for every $30 you were investing, you would have gotten back $900. If you would like to know how you can find trades like this on your own, here's the key takeaways, right? Market environment is becoming more favorable for short sellers. What do I mean by that? Well, clearly earlier in this video, I have shown you some of the market moves which demonstrate that they're not necessarily I mean institutional investors, they're not necessarily as eager to be buying these dips. They're not as enthusiastic as they typically would, because trust me, if we go back in the history, right, when Amazon drops $115, okay, institutional investors, they come like crazy. They come like sharks in the ocean when there is blood. We're not seeing that. For some reason, they're not being sharks. They're being these cautious, sea turtles or something right now. So we're not seeing the typical behavior. When these good stocks drop, they're not coming in, snatching them up, okay? So learn to short stocks by identifying divergences on the chart. So it's not just based like, oh, well, this stock has hit an all-time high, let's go ahead and short it. No, there's a specific process that we put our trading ideas through. It's based on the charts. It's a 5-step process which you will be able to apply each and every time. So don't short stocks on the news, because clearly if we were following the news this week, we would be buying calls. When Amazon was hitting 2,000 and 2,050, we would be buying calls. But we didn't. We shorted, and it was highly profitable for us, our subscribers that took action. So if you're not subscribed to our alerts yet, definitely take action, because the market is going to be a ton of fun. September, October, November, some of the best months. If you don't understand how to short stocks, learn to do it now. Just think about it. The stock market is at all-time high. What better time to be loading up? I mean, just imagine if you shorted all the technology stocks, and you knew specifically which ones were going to produce the highest returns, and you focused on there, like back in 2000, 2001, right? Look, the opportunity is very similar right now, and we're seeing that the bulls are backing off the opportunities that they would typically jump on board like crazy. 13 markets move formula. If you're a day trader, you absolutely have to understand how these 13 markets move. So take action, take that course. Success of alerts depends on management of the trade and execution. I've talked about it for quite some time in this video. I will stress it one more time that, look, the alert needs you to execute it correctly. So some people that got out of Amazon when it hit 2,000, they missed out on another $65 drop. So they were locking gains of maybe 200-300%, while they could have been locking in gains of almost 1,000%. Okay, so learn more so you can manage your trades more successfully. So to do that, just click some of the links below this video. The links are all in the description. Take advantage of this. Make 2018 your most successful trading year ever. I'll catch you guys in the next video. Thanks for watching.